Indeed, a very warm welcome to you. This is the Business Hour podcast. My name is Jimmy Mbogo, and today we are lucky enough to have the one and only Johnson Nderi, an investment banker from ABC Capital, who will be talking to us about investment. And for you as an entrepreneur, what do banks look at to put money in your business? But first, let's take a look at our quote of the day. And our quote for today says, the most important thing to do if you find yourself in a hole is to stop digging. That is by none other than Warren Buffett. All right, and just before we go into our interview today, we want to remind you that these interviews are currently being held at Workstyle, which has two addresses within Nairobi, but the one we record our podcast every week is at the address 7th floor on Muthangari Drive, Westlands. And with that said, Johnson, karibu sana to the program.
Asante.
And let's just get straight into it.
Right.
The first thing we want to know as entrepreneurs is, why are we getting so many rejections from the banks that we want to get into business with?
And not just banks, but also investors in general. I want to expand the scope to investors, because banks is a very small part of it. One of the reasons is because maybe people look for funding in the wrong place.
Mm-hmm.
So most people, the instinct is to go to a bank for funding.
Yeah.
But sometimes the nature of the funding you require is not possible to secure from a bank.
Mm-hmm.
And in that case, then naturally there's not going to be a deal there.
Yeah.
So if you understand the sort of funding you need,
mm-hmm.
it may be easier. It's actually easier to raise funds, because some funds are targeted at more risky enterprises than others.
Yeah.
Or more risky ventures than others. So if you understand how risky your venture is, and you understand the requirements from the various financiers available, and becomes naturally easier to raise funds for your business.
Because, and I remember this is a conversation we had on phone, because when I speak to most entrepreneurs, one of the challenges that they keep mentioning is we do not have access to capital. And I remember you mentioning something that capital is not their biggest problem. So what is?
Usually it's the market. It's much more difficult to sell than it is to raise funding. I mean, and most all investors will want to. The reason they're in the game is to make a return.
Yeah.
Right. But what makes you think if I give you money today, that the bright idea you have will convert to funding? I mean, to profits. Right. And a lot of the times the test is, do you have momentum? Right. So if it's a brownfield, the idea is just in your head or maybe on a piece of paper.
Yeah.
If you have not yet started implementing it, right,
mm-hmm.
it's going to be very difficult to know whether you're going to be able to generate revenues or not.
Yeah.
Forget even profits, just generate revenues. And for some people, for investors who've been in the game for a while, they know that. They know generating revenues is it's easier said than done, right?
Yeah.
Everything always works on paper. When you go out there, like they say, kwa ground vitu ni different.
Yeah, because again, Johnson, there's the question of how then do we stress test these ideas? How then do we make sure that we improve what is on paper to attainable goals in reality?
For some, it depends on the venture you're getting into. So for some, you'll find that sometimes you actually can start selling without even putting a shilling down.
Yeah.
Right. So the easiest ones we know off the top of our heads is obviously the LPO financing.
Mm-hmm.
Somebody's looking for one good or the other.
Yeah.
So you can start supplying those goods. So, but then if you secure the order,
mm-hmm.
that's a sale.
Yeah.
That's a sale, right? Now, what you're not doing now is you're not looking to finance a business, you're looking to finance a sale.
Okay.
So it gets easier, right? If you're able to demonstrate traction in the market, a lot of investors will be happy to support you.
But again, don't you find it ironic that some of these entrepreneurs will come and tell you, I had secured a certain deal, maybe from a supermarket to supply product X, but then I couldn't get financing to be able to meet this demand?
Chances are
Mm-hmm.
the deal you secured
Yeah.
is not as good as you think it is.
Okay. In what aspect?
I mean, just taking your example for starters, a lot of supermarkets have issues, right?
Mm-hmm.
And if I know that supermarket is not paying people on time,
Yeah.
why would I fund you to supply them? No, you've scored a sale,
Mm-hmm.
but the buyer is not capable, or is shifty.
Yeah.
So I'm actually saving you from.
But
I'm saving you, because if you go ahead and I fund you,
yeah.
and you sell, and you're not able to collect, and then have to sell your stuff.
So are you saying that investors are sort of helping entrepreneurs not to get in trouble?
One of the things that the financial markets do, they say the financial markets are the brains of the economy.
Yeah.
They are what determines what ideas get funded and what ideas don't get funded.
Okay.
What ventures get funded and what ventures don't get funded. So if you're finding it difficult to raise funding for a particular venture,
Yeah.
you need to think twice. Either it's beyond your capabilities,
Mm-hmm.
or there's some risks you have not taken into account, and then now you need to go back to the drawing board and figure out what is it that the market knows that I don't.
Yeah.
And sometimes they're just ignorant, right? It's true, you might know more than, sometimes the entrepreneur knows more than the investor. Actually, many times the entrepreneur knows more than the investor.
Yeah.
But remember, it's his skin in the game, right?
Mm-hmm.
So he needs to know that you'll succeed, and so you have to. He'll probably put up a number of tests for you to pass.
Okay.
Before he writes that check,
But
and that is designed to protect his resources.
all right, but again, therein comes the question of why not walk with me through this journey? Because again, I might be very green as an investor, as an entrepreneur,
Yeah.
but I need you experience as an investor to lead the way, to tell me if we went this route, maybe we're not going to get the returns that we would have wanted.
Because investors sometimes are not entrepreneurs.
Okay.
That's a journey you must walk
Yeah.
on your own. I can, like those Chinese movies where the master comes in, trains you, and can only walk with you out to a certain point.
Yeah.
It's the same thing, because the competencies of an investor are very different than from an entrepreneur.
Yeah.
One of the chief, attributes or shall I say characteristics of an entrepreneur is empathy.
Mm-hmm.
The one thing an entrepreneur can do
Yeah. is
identify a need or a want in society,
Yeah.
and say, look, this need, this is how we can, this is how we scratch it, right?
Okay.
And we can do it if we did it this way with
Yeah.
these resources, right? We can do it economically, so that we know if we scratch this itch this way, this guy will charge us. We can charge this much,
Yeah.
but it will cost us this much to deliver, and we'll make a profit,
Yeah.
right? So that's your job as an entrepreneur, to figure that out. An investor, his job is to figure out how much risk you're exposing yourself to,
Mm-hmm.
and whether the proposed return is worth it. So
Yeah.
they look at very different things. They look at your enthusiasm, they look at your competencies, they look at your so it's enthusiasm, competence, and your integrity. So
Yeah.
broadly speaking, those are the three things they look at. But you as an investor, as an entrepreneur, you're looking at different things. You're looking at, is the market large enough?
Yeah.
Is the effort worth my while? Can I put resources in a way that I can deliver this product at this price and at this cost? So the two of you work in tandem, and by the way, it's difficult to get two people who can do that. Work in tandem. So sometimes there's some tarmacking, shall we say, that the entrepreneur will need to do, but nevertheless, it's your job as an entrepreneur to line up the resources in a way that delivers products to the market at an economic rate.
Because of the three things that you have mentioned, there's no particular way of quantifying that your enthusiasm was at 100%. So from where you sit, from an investor's perspective, how do you measure some of these things?
So some of these things we look at track record, right? You want to sell beef, but your history is in selling beans. We'll wonder whether you actually know what you're doing. But if you listen, look, I don't know if you've ever heard Michael Joseph speak or James Mwangi. There's one common characteristics about these guys. They're the best entrepreneurs we've seen in this market. They are evangelists. When they start speaking about
whatever the product is,
right. Now that's an enthusiasm and competence put together. Now, if a guy is coming to ask you for funds, he's not putting any skin in the game. All he's going to do is put effort, right? But this guy is talking in a disinterested fashion, and you ask him questions, he's telling you, I'll get back to you, or I'm not sure. Or, are you going to put your money with him?
All right, so let me ask you, Nderi, then, is that one of the reasons that a lot of these entrepreneurs are not getting funding?
Yes, because a lot of guys, you've got an idea, but you don't, there are various ways to test your ideas. You can test it on paper, you can test it on the market, you can even see if you can even try get money from the triple Fs, friends, fools, and family. And just see where it goes, right? So sometimes one of the things that I've seen with guys at startup level, at least, is sometimes they don't think they have put enough thought into where they're going to, but they want you to foot the the risk, right? So at the very least, by the time you're going to a financier, put in as much thought as you can, so that if you are being asked any questions, you have, obviously you probably wouldn't be able to answer everything, but at the most important ones, how big do you think your market is? Who are you targeting? Are there any competitors? How are they able to deliver? Are there any substitutes to your products? At what price do you think this market will take your product at? At what cost do you think you can deliver this product? So you should have all that at least, so that when you're coming to make a pitch, even just from your numbers, I should be able to tell how much I will make.
So that then brings in this question of, at what point should I, as an entrepreneur or a startup, start looking for financiers?
Yes. So you're a difficult question to answer, and sometimes some ideas are just so brilliant. Sometimes the problem isn't even the ideas. Sometimes the problem is the person presenting the ideas.
I'm sure there's someone probably who's listening to this and wondering, how could I be the problem?
I mentioned the 3 Fs. So as an investor, when you're coming to raise funding from me, who else has put money in you? Has anybody in your family put money? Especially if you're coming from a well-off family. If not, I'll have to ask why. What? It's supposed to be a brilliant idea. People are supposed to be making money from this idea. Why isn't your family jumping in? What is it that they know about you that is holding them back? So some of those are small indicators that investors look for. So I mean, it's ad hoc. Everybody will analyze their opportunities differently. So you as an entrepreneur, as much as possible, develop the idea as much as possible before you go to anybody for funding.
Okay.
Yeah. Talk to your mentors, talk to industry experts, talk to whoever. Right? You can do it without necessarily divulging your ideas. And I know some people think that the idea is very important. You need to protect it. I'm telling you, there are 50 million Kenyans. All these guys have brains. They dream, they can think up whatever it is you're thinking up. The value of an idea is not in the idea itself. The value is in execution.
Okay.
Yeah, so if secrecy is holding you back from executing, then your secrecy is not helping you. Right?
All right.
You need to get out there and see how to execute as quickly as possible. But you need to develop your idea as much as possible.
And that's a good point, because again, a lot of people will say, I don't feel comfortable telling you this idea in full until you make a commitment to invest in it.
But some people, you're coming with an idea without even a team to execute. So I give you money today. Not look, I could have put that money in a government bond and start earning money today.
Yeah.
Why should I put the money with you today and you have not yet hired people, or you don't even have a team around you that is necessary to execute? You don't have the equipment necessary, you don't have the skills maybe, or maybe you do, but there's one thing or the other is missing.
Yeah.
So how do you compensate me for putting for leaving my current investments to put with you? Right? So sometimes it makes sense to work first before you become an entrepreneur.
Yeah.
Just so that you can develop the early seed resources, early resources to seed your company.
Yeah.
And just to understand what it takes to run a company. See, when you're an employee, you have a very limited responsibility. Your field of responsibility is very limited. When you're an entrepreneur, you're the chief finance officer, you're the chief marketing officer, you're the sweeper, you're everything in that company. So until you get help, right? So some people have not truly appreciated how difficult entrepreneurship is, and sometimes that's what, by an investor telling you no, he's saving you from that.
All right. So in your opinion, is it safer for me to invest in a business or to open up a business that I'm familiar with, or go completely out of my way? Let's say this is my line of work and I open something completely different. Which one is safer?
I always say work within your expertise. Even if the opportunity that you're chasing has nobody, it's probably easier for you to work within your expertise than going into a new field that you have no idea. You don't know how big the market is. You don't know what the competition is in that market. You don't know what it takes to deliver products and services to people, and still meet the obligations from creditors. So it's usually better to work within your expertise, because then you've got a head start.
All right. Then there's also this concern of what gets me in the room, what gets me in that room to be able to pitch my idea.
That's a function of knowledge, I believe. The idea is just to know who funds. Once you know who funds. By the way, the reason why these financiers open their doors every day is to fund people. Right? Banks open their doors. They don't open their doors to fund people they like. They open their doors to fund people who can make them money. Right? So the question is, are you that guy? Right? So, but it's a knowledge thing. There are different types of financiers who work in different stages of businesses. So the question is, what stage is your business? And therefore, who would want to fund you.
All right, and let's try and switch gears now and talk about the issue of alternatives funding, alternative sources of capital. Because normally most entrepreneurs and will tell you, I started my business from my savings. A good number of them will tell you, I took a loan to start my business.
Yeah.
So how then do we make sure that we can use all these other channels to get funding?
So the initial sources of funding, you're right, is usually your savings, and friends, family, and fools.
Yeah.
Once you get there, now banks can look at you, right? But beyond banks, there are also venture capitalists, angel investors, private equity, and then that's for a little bit more mature companies.
Yeah.
But debt is mostly from development finance institutions and banks.
All right, and when you look at the statistics, for instance, in the
There's one of me, trade credit.
Okay.
Your suppliers.
Uh-huh.
Your suppliers are also a source of debt.
All right, so and that is on the issue of just getting alternative sources of capital.
Yeah.
But when you look at the statistics in Kenya, for instance, there's this notion that a good number of the startups will die off between year 1 and year 3. Why is this the case? And then how do we change this narrative and make sure that even these startup and these entrepreneurs who are starting a business for the first time are able to succeed like we're seeing in other countries?
I say that's a global phenomenon. It's not just Kenya.
Mm-hmm.
Yeah. Usually it's one thing or the other. There's no one thing that makes a business fail. They say failure is an orphan, right? Success has many.
Yes.
Yeah, but the truth of the matter is the causes of failure are myriad.
Mm-hmm.
You could have the perfect business plan, but if you don't have a good team, you fail. You can have the perfect business plan, perfect team, but poorly aligned, you fail. Could be anything. So failure has many sources. That's why we're saying, develop that product as much as possible, right? If you have a good team, if you've got a good team and a good business idea, the probability of failing falls. But ultimately, it could be it's not easy to say that this is the biggest cause of failure. No, it's difficult.
And so when you're talking about this team to start off with, who must I have in my team when I'm starting off a business?
That's a good question. But ultimately, you as an entrepreneur, in as much as I'm speaking about entrepreneurship right now, I'm not an entrepreneur myself. I'd like to think I can tell a good business from a bad one.
That's why you're an investor, yes.
But I advise investors and entrepreneurs. But what is the job of the entrepreneur? The job of the entrepreneur is to identify gaps, needs and wants, unmet needs and wants, and to deliver those things, deliver products to satisfy those needs and wants at an economical price.
Mm-hmm.
Now, to do that,
what
resources do you need? It's up to you as an entrepreneur to identify that. And now, investors usually come last, right? And they're like, okay, we think we like what you're trying to do, and we think we can support you. So that money is now just like the final plug, right? Yeah. But usually, it's you as an entrepreneur who, it's nobody. See, you're unique. Nobody is gonna tell you this is a better way to do it. If they knew a better way to do it, they'll be doing it themselves. Yeah. So, but there are just some indicators we look for, and we say, okay, this looks like it work. Might not work, by the way. It's just an opinion.
Yeah.
It looks like it'll work. Let's back it. Yeah.
All right, and I think that that's also in line with from where you sit in that advisory capacity. When you're looking at a business plan, for instance, what are some of the key things that you will look at?
We'll look at it the same way an investor will want to look at it. So the question will be like, okay, again, it's market.
Yeah.
We first will need to understand the product, and then need to understand the market you're targeting. We need to understand your route to market. Now that's a strategy.
Yeah.
And then we'll need to look at your team and see if it has everything. We think it has everything that is required to deliver. If you've ticked all those boxes, then chances are you've got a good chance of so we'll help you pitch to investors.
There's this concern of, I might think as an entrepreneur that the business plan that I have is the best, only for me to be turned away by these investors, or for them to say we might not be able to put in that kind of money at this moment, but come back after a couple of years.
Number one is minimum ticket size. Some investors don't go below a certain size because it's not worth their while.
Okay.
Some will. Sometimes, like you pointed out, the young companies usually have a high death mortality rate. That makes them one of the early companies very risky stage, risky investments. But there are people who believe that they just need 1 out of 10 of those, or 1 out of hundreds of those to actually, make the return that they're looking for. So sometimes if you go to the right investor, whatever you're lacking in gaps, they'll support, right? Because sometimes some investors, like the accelerators, they just need you to come with whatever you can, and then they'll support you with the rest. May not necessarily be financial, will just be technical support. But some will want you to be like private equity will want a more mature business, everything in place, and has been running maybe 4, 5, 6 years before they invest. So different investors will approach it differently. Different investors will. Sometimes if you think it's a good idea, even if it falls short, you'll be like, you know what, this is where the gaps are, and we think we can plug in. But sometimes, if the plugs look too big, something, All
right, and I think let's also talk about these entrepreneurs. You've gotten yourself into that room. You've been allowed to pitch your idea. When you're negotiating for stake, how much stake do you need? Must you be willing to give away? Because with some investors, you might say, okay, let's go 50-50, but then that will be the reason for them to pull out and tell you, why don't you believe in your idea enough to want a bigger stake?
Again, that's a personality thing. You know what I'm talking about when I'm talking about indicators. For some people that's an indicator, for some other people that's not an indicator.
Okay.
So it depends on who you're talking to. And that's why you're advised to cast your net wide, because to get people who actually match you well is not easy. Deals require panel beating. My last deal, I was telling those guys they need to hire they need to get a good marriage counselor because business is like a marriage, and fights are normal, and they should expect as much. So you want to cast your net out wide, talk to as many potential investors as possible. This one guy is going to come up with that kind of response, and somebody else will come up, you know what, me I want 75%. If I don't if I don't get control, I can't trust you with my money. You see where that guy is coming from. This other guy is coming from an enthusiasm perspective, or is testing the belief in your ideas. So it's just different people approaching it differently.
All right. So for you as an entrepreneur, how much of your company should you be willing to give away, or do you come in with a fixed percentage and tell them for 500,000 I will only give you, let's say, 30%?
So typically we do valuations. So depending on where your company is staged at,
Yeah.
are different valuation metrics that support different numbers. So if my valuation is 100 million bob,
Yeah.
and I'm asking you to put in 50 million, if you're asking for 60%, you're probably in the ballpark, right? If you're, so now it's a negotiating issue. You see, you've got your ultimately pricing, because now we're talking about pricing. We're not talking about you've got your value, I've got my value, right? So now we must agree, and that process is called pricing, right? It's just not, it's not different with the way we buy goods and services in the market.
Yeah.
So now for us to agree to come to that to a price we both want, or we both will accept, it's a process of negotiation. Yeah, and sometimes I always advise guys to do pricing last.
Yeah.
The other terms are probably more important. Who's in charge of strategy? Who's in charge of the money? Who's in charge when this happens? What happens when this happens? What happens? Okay, now that everything is we're in agreement, we think we are in alignment. Now let's price our deal.
All right. So Nderi, let me ask you, from where you sit, what is a sellable idea? What does it look like?
The easiest one is the one that's making money.
Okay.
I mean, it's got validation in the market.
Yeah.
No matter what I say about that idea, it's making money. So even my opinion is uncalled for at that point.
Yeah.
But now, the further you are from that, the more difficult it is to argue that it's sellable.
Even the reason I'm asking you this, you remember some time back when everyone decided to go and sell quail eggs?
Yes.
And that became sort of the hot cake, the sellable idea at the time. So when you're looking at an original...
And it was. So they were selling. The problem is maybe just because maybe supply, at some point, supply exceeded demand. But there was demand, in my view at least.
Yes. So for myself as an entrepreneur, or anyone who's watching and listening to this, how do I then make my idea that attractive?
It's not you that makes your idea attractive. It's a market. It's all about the market.
Yeah.
If there are buyers, nobody else's opinion matters.
Okay.
Yeah. As long as you can demonstrate there are buyers.
Yeah.
Then it's a sellable idea.
But again, you realize, and especially when you look at this at our Kenyan concept and environment,
right,
you'll find that one idea at one point is highly marketable, but the same idea 5 months, 10 months then down the line, it's no longer tenable.
That is true for almost all products except maybe Coca-Cola. It's only a product that has been around long enough. But if you think about what was available, what you're eating, what you are drinking, whatever products you're buying, when you are 10, 20 years old, and now you'll find, the top 10 selling products when you're 10 years old is different from the top 10 selling products when you're 20 years old. It's different from the top 10 selling products. I'm assuming you're beyond 30. About the decades, right? Yeah. So one thing that is constant is changes in two things. Changes in preferences amongst your consumers.
Yeah.
I remember once upon a time, chips and sausage was what would get, would float my boat.
Yeah.
Now maybe it's ugali and nyama choma or something else. You understand? Yeah. So so there's that, but also there's competition. Every other time there's an entrepreneur thinking up new ideas, there's always a pen in the market, and that's constant. Yeah. So, and especially in today's world where financing is readily available, it's easier now to move from being a worker to being an entrepreneur.
Yeah.
So because there are many of those kinds of guys, there's always new products coming up, and that makes older products redundant or less valuable, and then that drives change. So those two dynamics, in my view, is the reason why they say as a business you have to keep innovating, even that is not a guarantee. But at least one thing we know that is if you stand still, you change will change you.
There's this question: when you look at the Kenyan environment, what is making entrepreneurs not get to that next level of Facebook, that next level of Amazon, that next level of?
I think there, in my view,
Yeah.
especially at this point in time, it's macroeconomic factors. Number one, we have got very low savings.
Okay.
And even then, those savings are stuck in institutions that probably don't support. I mean, if you go to other countries like US, for example, you'll find a lot of pension funds supporting private equity, supporting venture capital funds, and the like. How many VC companies that are homegrown in Kenya do we know? There are not many, right?
Yeah.
One of the functions is low savings rate. The other problem is the savings rate is with pension funds, which are by nature risk averse. By nature, but the setup is made them risk averse. So that sort of creates a barrier between entrepreneurs' access to capital. So we have to. I mean, there's movement towards that.
Yeah.
There are a lot of foreigners that have come and set up and sort of plugged in the gap, and we are thankful for that. But one thing about foreigners is that they want to see locals doing it for validation. The other thing I think is an issue is just it's just more difficult to do business here than it needs to be.
Okay.
Too many regulations, licenses, taxes, and all that builds up. High inflation rates. The central bank thinks that inflation rates of between 7.5 to 2.5 are okay.
Yeah.
In other countries, anything above 2% or 3% is unacceptable. Yeah. That's because if you have an average of 5% inflation rate, that's a very high rate for you to make up. Remember, you're talking about if you're buying an asset today and you're going to make money off of it.
Yeah.
Replacing that asset 5 years down is not going to be easy, because price has been going up 5% at least year on year, right? So for me, more than anything else, I think is the operating environment is just tough.
All right. So your final words to any investor in Kenya, or rather any entrepreneur in Kenya, what do I need to look at? What do I need to do going forward in terms of pitching for my ideas, in terms of raising capital?
I think it's just to think positive. I always tell guys that even standing as a citizen, this society will be saved by entrepreneurs. A lot of people look for salvation in the political arena. I think they're mistaken. If we are to be we've always got this mantra about the three poverty, disease and ignorance, right? Every politician comes to tell us that, but the truth of the matter is that it's no politician. That's why it has never been solved up until now. The solution will always come from the entrepreneurs. It will not come from politicians. So for me, I think if they always think, if the average Kenyan is thinking positive, always think about good ideas, how to make society better off, I think the final analysis will be better off.
All right, Johnson Nderi, thank you very much for coming to the Business Hour podcast. We're hoping to host you again, and maybe you can tell us what are the sellable ideas at that point. But thank you so much for taking the time to speak to us.
It's been a pleasure.
And that's all the time we have for today, and that's how we wrap up this show. Remember, as we always say here, every hour is business hour.